Hello, everyone. I'm today joined by Cuy Sheffield, head of crypto at Visa, and Simon Jones, chief commercial officer at Baanx. The reason we're here today is because I understand that you guys have an exciting announcement to share. Can you tell us a little bit more about this?
So yeah, obviously, as Boaz said, I'm at Baanx. I head up the commercial team, but we are basically the market leader in crypto payments or non-custodial card payments. As you know from previous interactions, we obviously launched, I think, probably the first commercial use case using account abstraction on Ethereum, which was the MetaMask card. And then obviously, subsequent to that, we partnered with Visa, specifically focusing on stablecoin spend from direct from self custody, which we think is a really interesting area in terms of the use cases and the different places that you can apply that and the financial inclusion angle. So obviously, we're delighted to be working with Visa on that. And at that point, I'll let Cuy introduce himself and add a little bit more.
Yeah, so we've been following the stablecoin space, for many years now, and I think it's been really exciting us to see all of the ways that consumers are interacting with stablecoins through different types of wallets. And it's like as blockchains have improved, as they've gotten faster, as they've gotten cheaper, there's just more that you can do on chain, and stablecoins are just playing a major role for anyone who has a self custodial wallet, anyone who's interacting with different decentralized applications, that they're able to do that from the wallet where they control the keys. But the challenge has always been, okay, if you want to live on chain, if you want to do a bunch of interesting things, how do you then get your money back into the real world? And so we think that Visa should be the acceptance network for stablecoins to enable consumers to spend from a balance of a stablecoin at any merchant that accepts Visa. But to do that, you need specialized enablers. You need companies who are literally built and optimized, helping self-custodial wallets be able to issue cards. And so when we got to know Simon and the Baanx team, it was really clear, that they are kind of building a unique solution that's specifically solving this problem. And so we're really excited to partner with them, starting in the United States, helping to issue self-custodial wallet link cards, and then to expand that partnership outside. We think it's going to lead to many new card programs coming to market that are going to solve real problems for consumers.
That's very exciting. Last year, Visa Crypto sponsored a very interesting report with Brevin Howard, Castle Ventures, Artemis, which documented a $2.6 trillion in stablecoin settlements in 2024. How much of that are you guys hoping to capture with this project?
Yeah, so I think first it's fascinating that all stablecoin data is public on chain. So we've been investing a lot of time and resources in our on-chain analytics. We've got Visa onchainanalytics.com. It's a public dashboard. We've been explaining to policymakers, to financial institutions that you can see a lot of that activity here. I think what we've seen is to date, most stablecoin activity has been just crypto trading and not coming back into the real world and spending at merchants. And I tell everyone, like, if you have $100 of USDC in your wallet today, where can you spend it? Good luck going and trying to scan QR codes and figuring out, okay, which merchant accepts, which doesn't. If you can embed a Visa credential into that wallet, if we can have partners like Baanx be able to put those cards in every self-custodial wallet, you don't have to think about it. The wallet has the same utility, that any other financial service across the planet has, but you're spending from, the currency that you choose in the form of a stablecoin. You're able to interact seamlessly between on-chain, in the real world. So we think there's a massive opportunity, globally, and we're still at the very, very early stages.
Absolutely.
And how is this going to work? Is the goal that every single uh, non-custodial wallet is going to have its own card program? How's it going to work? How do you guys envision this?
So I think, realistically, I think most wallets will at some point add a payments credential, right? I think when you look at the kind of product evolution, the direction of travel, picking up on what Cuy said, you still get that kind of piece of how do you make your funds usable in the real world. And I think most wallets are looking at this and saying, look, if we want to be able to actually retain user, trading is great, holding assets is great, but obviously you need something that actually pulls the person back or the user back to the wallet, right? So you could have a crypto wallet that you never access. You've just bought something, left it there, and never gone back to it, right? And that doesn't really generate revenue for the wallet in that world,
Yeah.
right? Especially in a self-custodial world. So I think that from a product journey perspective, what we're seeing across a number of our partners is that they're all looking at this as a retention tool. They're all looking at this as an engagement tool, and they're all looking at this as the kind of how do I actually put crypto into your hand And if you think about the experience of going to pay, it's an eight, right? For people of our age, there's an expectation that you have a card in your wallet, you go into a store, you tap your card, you pay, it goes through, you leave, right?
Mhm.
And I think where this is really interesting is that the idea that you're taking this kind of alternative store of value that isn't just a classic bank account, but saying, hey, actually, you can go and spend that. And to us, I think what that really starts to do is kind of remove a lot of the kind of wires that we talk about in our sector, where we talk about the
Mhm.
blockchain, we talk about this, we talk about that, we talk about all these other things, which perhaps to some extent speak to a very limited audience. And actually, you just say, look, here's a card, here's your wallet, go and spend money. That's a familial experience, and I think that you'll probably see, in my mind, I think of the larger wallets, at least 60 or 70% of them will have a card within them within the next 12 months. Yeah.
Yeah, I think it's a major trend, and then the other way I like to look at it is like self-custodial wallets have the potential to become more and more of these almost like super apps where
Mhm.
they're kind of like this gateway into all different types of financial services with DeFi. If you want to play a Web3 enabled game, if you're collecting an NFT or a content coin, like there are all these things that you can do. But for the value that you're getting to then translate back to your day-to-day life, you need to be able to have that easy off ramp and that bridge. And I think that the experience historically of, okay, I'm going to spend a bunch of time on chain, I'm going to do all these really interesting things, and then I'm going to have to plan ahead that now I'm going to send the funds back to a traditional centralized exchange, that I'm going to cash them out to my bank account. Like you lose that cohesive experience. And so we're really excited to see, like, it's impossible to predict what are going to be the new applications built on blockchains. But I think what you can
Mhm.
predict is to say, whatever new application comes on a blockchain, you're probably going to access it through one of the leading self-custodial wallets today that you already use. And like, that's the value, is that that's where your funds are. That's where you've got, an interface and a relationship, that lets you get into whatever's happening on chain. And so I think that these wallets are going to get stickier and stickier, providing more utility, as the applications on blockchains expand. And so they really have an opportunity to be a consumer's home if they can also then bridge back to the real world, which is what cards issued by leaders like banks can help do.
Absolutely. And what's really interesting as well is, I think when you look at how fintech and crypto are merging, right, as a sector, I think,
Mhm.
if we had this conversation 2 or 3 years ago, crypto was very much its own thing, and fintech was very much its own thing, and kind of never the two shall meet. I think
Yeah.
now, what we're increasingly seeing is that the kind of wallet space is becoming much more fintech focused, and fintech is becoming much more crypto focused. So you've got this kind of convergence where you can see that effectively people are building towards consumer. And I think, as Kai said, I mean, in my mind, the next super app will probably be on chain. Because when you look at the
Mhm.
number of people building in this space, the number of people trying to innovate in this space, it's inevitable that the next Robin Hood or the next Revolut or the next, kind of super app that comes out that really gets adoption will be on blockchain. Because there's just so much you can do. And I think, discussed this at length internally about, the use cases, for example, matching, for example, AI with blockchain, where you could start to actually make some of the consumer functionality in the wallet a lot easier, but you still have that kind of system of record so that you can see what the agent's doing and
Mm.
things like that, really start to abstract away the complexity from the user. But obviously, to be able to do that in the first place, you have to be able to get money in and get money out, right? And I think that's the bit that we kind of solve, is the kind of, it's the flow piece. It's the, how do I make this a usable product that actually, I could go off and play with my wallet in the morning, make a bit of money, and decide to buy my lunch with it, right?
Yeah.
Yeah.
Kai, Simon, can you guys share any figures with regards to non-custodial crypto card payments? There's a lot of new products that have been around, a lot of things have been happening. Are there any figures you can share with regards to the growth of this sector?
I mean, that's a good question.
Yeah, I don't think there's any Visa payment volume data that we can share today,
Hmm.
Simon. I'm not sure on your side. I think it's clear to us that there are tens of millions of monthly active users of self-custodial wallets.
Yeah.
And I think that, like, the users of self-custodial wallets, when you look at the on-chain data, when you're an active user, you're doing a lot on chain. And so I think we found that these products themselves, they are very sticky. They become, someone is opening up the app many times a day. They're checking their portfolio. They're, staking an asset on a different chain. They're, buying a, like, there are all these things that they're doing. And so we think that the addressable market is, very large, both in engaged, younger, affluent consumers that are all over the world. We think we're still at the very early stages of, if you look at all of the consumers who have, money in a self-custodial wallet, how many of them are active users of a card connected to that self-custodial wallet, I would say is a very small percentage overall today. I think we fast forward a few years from now, as the barrier to entry for a consumer to get a card, as it gets easier and easier with products that Baanx is bringing to market with many of these wallets, I think we'll see, a much greater number of consumers who are already storing value there, already using a wallet, now having a card linked to that wallet. And so that's the number that we're really excited about. But I think we're still in the early stages.
Yeah, I agree. I'm not sure there is a. I mean, I guess in theory the growth curve is huge if you look at it in percentage terms, because it's a space that's so young. But I don't think there is actually a particular, kind of Web3 card, self-custodial card, kind of product code that you can go and pull and say, hey, this is how many of them there exist.
Mm-hmm.
But I certainly think it's an emergent sector. And I think what's also interesting, in this world, if you look at what the guys at Visa are doing, for example, where they're moving towards, for example, stablecoin settlement, where the objective is, I look at Kai as I say this, see how he reacts. The objective is to obviously start moving towards 7-day-a-week settlement and potentially real-time settlement as well in time. And actually, that's a really interesting use case, because what it does is actually the benefit to that is really to the merchant, which is unusual, because normally when we're sat here looking at issuing a product, we're thinking about the consumer, right? But from a merchant perspective, the fact you don't have to wait multiple days to be paid for something you have just sold is actually a huge use case in itself, right? It removes a huge amount of friction from the supply chains of the world, but also, it speeds up liquidity, right? And liquidity plus velocity equals growth.
Yeah.
So I think it's actually a really interesting thing that when you start to couple things like stablecoin settlement with the ability to spend a stablecoin, you start to create this kind of virtuous loop where at some point you say, well, actually, the benefit to switching to stablecoin is actually for all participants here. So therefore, that clearly has to be an emergent trend. It has to be something that over multiple years is just going to perpetually grow. And I think, if you were looking at stablecoins specifically, in terms of your question of how many people are in this space, that's probably your best yardstick, actually, if you're looking for a metric, is to say, well, actually, look at the growth of the larger stablecoins like Tether, like USDC, and also look at the number of wallets that are holding them, right?
Yeah.
And that curve is pretty much up only. Even in the last bear market that we went through in the crypto space, USDC and Tether actually grew in terms of value in that time.
Yeah. So there's now close to $200 billion in stable coins. But, let's take a break maybe from the numbers and let's try to paint a picture of what the actual target user looks like. Who is it specifically that this first iteration of the product is for? Who is this user? What is their problem? What are you trying to solve with this?
So maybe I look at it as like there are two sets of then consumers here. One is the Web3 crypto native, someone who is living on chain, who's using a self-custodial wallet every day, and they might be staking on ETH, earning staking rewards, auto converting that into USDC, and then using USDC to go out to dinner. And so there are all these ways that people are either generating income or trading or having different on-chain activities that then they need to translate that back to a stablecoin, but they might not necessarily want to send it all the way to fiat in their bank account, because maybe there'll be a meme coin that launches the next day that they buy, like that they'll keep cycling back through that wallet. So I think that there are these on-chain native consumers that self-custodial link cards are a really clear product market fit for. And I think the other segment are consumers outside the United States who are excited about dollars. They want access to dollars. They want to be able to spend and hold dollars. And so we're seeing more demand globally of consumers and small businesses that aren't even really crypto natives. They just want access to dollar denominated financial services. And so I think ultimately self-custodial like cards will be able to offer solutions to both. I think there's a very clear opportunity ahead of us in the US with the crypto natives being able to offer them card programs like this.
Yeah. Yeah, I concur with that view, and I think that to me, I think when you also look at kind of people, for example, in emerging economies where for example, access to a bank account may not be the easiest thing to get. Yeah, I look at Argentina as a good use case for that, where if you want a US dollar denominated account, you have to have a certain amount of money to be able to deposit. I think it's $10,000, which for the average Argentinian is a huge amount of money. So the idea that you could automatically kind of keep your funds in dollars if you want to, dollar denominated stablecoin, but then have the ability to spend in the dollar versus on a card is actually quite compelling in terms of purchasing power, parity, and all these other things that people get. I think one of the other use cases that I would also highlight is the ability to be able to spend money quickly, right? Because there are actually a huge amount of use cases in the industry, especially about aviation, for example, or travel. Things move around the world, money has to travel with them. But the problem at the moment is that people often travel faster than money does.
Yeah.
And that creates friction. You can start to remove a lot of that immediately by using stablecoins and the ability to spend a stablecoin that you receive in real time.
Simon, you mentioned that one of the things that could be quite interesting about this new partnership would be the intersection between crypto payments, stablecoin payments, and AI. So, in your view, what sort of problems does AI plus stablecoin payments solve that currently are unsolved?
To me, I think there's probably three kind of key areas, right? So the first question is, how do you hide the wires, right? There's a lot of stuff you can do in a crypto wallet today, but it often involves you signing smart contracts, delegating things, installing extensions, doing things in a browser, doing back to a phone, doing all these different things where there's a lot of user journeys where actually you're like, well, I know what I want to do. If I just have a system like a command prompt to say complete this task for me, that would be great. So I think that's one of the biggest use cases for AI is how do you actually build UI that can effectively operate within the wallet, i.e. your own configured agent. I think the second piece, though, is that kind of piece around, and Kai talks about this. If someone might be staking Ethereum or might be doing something like this or that or anything else in the background to earn some interest or some yield, whatever you want to call it. And actually, the processes to manage that in a lot of wallets are incredibly manual, right? There's very few kind of triggers where you could say, actually, I've got to remember that something unstakes next Tuesday, and therefore I've got to go into my wallet and restake it if I want that. So I think those kind of use cases. And I think when you start to put that kind of idea of consumer benefit together, you then start to get to this idea of saying, well, actually, that becomes a larger store of value for you because it becomes something that's easier to interact with, or you can do more things there. We're talking to a number of wallets at the moment are looking at adding additional product features around trading, of stocks, 24/7, 365, these kind of things. So when you start to kind of create that idea, you kind of get to this point where the wallet becomes like a central view for potentially a store of wealth, right? Where I have my staking where I'm earning some yield. I have my trading potentially. I have my holding. I also have some stable coins that someone just paid me because it was the easiest way to be paid, right? And of course, all those things talk to this idea of, look, within a funnel, you want the ability to have liquidity. And I think where the card becomes particularly interesting in this instance is that idea that, I could send you a stable coin directly from a wallet, but if you don't accept that, I can just tap my phone or tap my card to pay. And I think when you start to kind of put that idea together, what you end up with is almost like a collective view, right? Where you're saying that you've got the ability to do all these things, but you're not making a compromise. You're not having to move money back to a centralized exchange and send it to a bank account to be able to access a card, which would put a lot of users off. Right? People like us are slightly different because we're really into the space. We're not the average consumer. To the average consumer, they're used to almost one-click finality when it comes to using these types of products. And I think that's where people like Visa really come in with the network and say, well, actually, we can plug this store of value into hundreds of millions of merchants around the world. It's 150 million, isn't it, Kai? Is that right? Yeah.
That's right.
Okay.
All right, Kai, I appreciate you've got to leave in a minute. Is there anything else you want to share with us before you go?
I think we covered it. Really appreciate you having us on, and really excited about the partnership with Simon and Baanx. And it'd be great to come back in a few years and to see how many more self custodial wallets now have card programs linked to them and are spending at every merchant that accepts Visa.